Live from Sydney, I'm Paul Allen, and this is Insight, where we dive deeper into the stories that matter with crucial context and sharp analysis. Asian stocks rise as a subdued US inflation report eases fears of an imminent Fed rate hike. South Korea's Kospi entering a technical bull market on a rebound in the AI trade. India's Tata Group facing fresh uncertainty with Chairman N. Chandrasekaran due to depart next year. We're going to speak with a leading expert on Indian conglomerates about governance and succession risks. ASUS posts a 28% jump in first half profit as revenue and operating profit both leap. We're going to speak exclusively with Co-CEO S.Y on growth drivers and demand trends. And Treasury Wine weighing shifting consumer habits as earnings weaken. CEO Sam Fischer is going to be with us exclusively to discuss US and Chinese demand, supply pressures and industry restructuring. Asia tech stocks are rallying hard, tracking Wall Street as tame US CPI data helps ease concern about Fed rate hikes. Korea's Kospi is roaring back into a technical bull market. Tencent's AI strategy, though, is worrying investors, even as it more than doubles spending on the technology. So let's check in on how markets are faring. Avril Hong's with us in Singapore. Avril.
Yeah, Paul, this snapshot of the markets in the region looks pretty familiar, doesn't it? The outperformance of the Kospi, underperformance of the Hang Seng. And of course, this is all following on from Wall Street's performance where the S&P 500 closed near a record. The Kospi is back. The memory trades are back against the backdrop of that positioning washout. And following on from where you look at the AI complex, earnings have been pretty stellar overall. And then, of course, all these large language model launches, the innovation that investors want to see as well. So that's the backdrop that is helping the memory trades where you're looking at SK Hynix, Samsung Electronics, even Kioxia in Japan is doing well today and helping the Kospi, of course, to climb 20% from the July lows. So those gains take it past 20+%. This year alone, the Kospi's gone from bull to bear to bull again somehow. Now flip the board and take a look at what we're seeing in the macro backdrop. Of course, as you alluded to, it's really the US CPI print, which showed signs of disinflation. So that helped to ease investor concerns about an imminent Federal Reserve rate hike. The pricing for September went from 50-50 to about 40%. And we saw the steepening in the curve. So the relief rally in the bond markets was led by the short end. The long end, though, continues to be bogged down by concerns about persistent deficits, the unknown surrounding the Fed's reaction function, AI debt issuance even, and of course the data has also reignited that debate about whether AI productivity is causing disinflation and at some point maybe deflation. Now flip the board again when it comes to AI and Tencent. It is ramping up spending, right? Doubling AI spending to catch up with its peers. It's seen as a company that is lagging in the competition. But I think even though it's ramping up spending to the extent that free cash flow is turning negative, investors were just not convinced of its AI strategy. There's not enough in the earnings call to convince them that it's going to be able to differentiate its products from the big names such as ByteDance or Alibaba or even the smaller labs such as Moonshot. And then, as our Bloomberg Intelligence colleague Rob Lee had been highlighting, all that talk about renting out AI infrastructure did not help to spark confidence on Tencent's AI strategy. So this is what you're seeing in the reaction in the stock today. That is the drag that is capping, pulling back the MSCI Asia Pacific. And by the way, this is coming with a lot of volumes, the declines that you're seeing in Tencent, setting the stage for the rest of Chinese internet names earnings as well. Paul?
All right, thanks very much, Avril. Joining us now is Samantha Horton, COO at digital wealth management platform Syfe. Samantha, thank you so much for joining us today. And I do want to just pick up on the points that Avril was making about Tencent there. I mean, we've got surging CapEx, doubling the AI spend as well. But where's the revenue going to come from? Is this top of mind for you or something else?
Thanks, Paul. And yes, definitely. I think this fits into one of the key pillars that we also see, and what we've been sharing with our investors, as part of our recent outlook, is that essentially we're seeing a move and a maturation in the AI trade, and essentially moving from AI spenders, which Tencent would be, in that category, and now there's a lot more scrutiny on the ROI of some of this spend. As you saw, revenues had not really taken off as yet, but spend is outpacing. However, we're now seeing, and what we're pushing is that where we're seeing the biggest potential gains and the risk reward is more in those AI enabler companies, right? So more on the AI infrastructure side, chips, as you mentioned, earlier, SK Hynix, where compared to Tencent's 11% revenue growth, we're actually seeing that come through in terms of 257% revenue growth in some of these enabler and infrastructure plays. So that's where we're really seeing the shift for us in the coming months, and a better risk reward skew.
Yeah, well, we do have short interest in a lot of Chinese tech platforms starting to fall now, and Tencent setting the stage for some more big earnings coming up in the next few days. Would you be a buyer of the Chinese AI story at the moment?
So as I said, I think our view is you have to be selective. So more kind of broad-based, buy everything now as this trade matures, and much more selective in terms of where we're actually seeing that ROI come through. So for us, where we prefer is actually more China onshore versus offshore plays, so more in that hardware space versus more on the software layer. So that's kind of where we would position.
I know in an operational sense, your platform, Syfe, has embraced the AI story. Correct me if I'm wrong, but I think you can ask
yes.
your platform's AI to say, okay, build me a AI story that is selective on AI. What would that platform look like if I was to ask that question?
So you can go to a platform and ask. I'm not going to preempt what AI would what our AI tools would say. However, yes, that's correct, right? So now where we're seeing is if I kind of go to, again, what I was saying earlier around more on that hardware space. So for instance, what we're seeing is a potential opportunity is, and what it might come up with is, the Star 50 index, for instance. So again, more playing on that hardware onshore plays versus offshore. But you might have to go to the platform and check if that's actually the case.
Okay, play around with a few settings, but if you're looking for diversification away from the AI story, where would you go at the moment? What are some of the unappreciated corners of the market that aren't getting the attention they deserve?
Yeah, so that's a good question, Paul. And this is, again, one of our other key pillars where we're actually seeing a lot of concentration risk right now in the market. And what I think doesn't get enough focus perhaps is that, even if you look at the S&P 500 right now and you think that you're buying a diversified index, but now, the top 10 stocks in the S&P 500 make up 40% of the market cap, right? And that compares to 30%, at the start of the 2020s, and at the height of the dot-com boom, this was 23%. So there's a lot of concentration risk that is emerging, and a lot of it is around, the tech, big hyperscalers and tech plays. So where we're seeing the opportunity to diversify is where I was, saying on terms of more that shift from AI enablers, spenders to enablers, but also what we're really seeing is actually a shift also outside of the US. So from our platform, double the amount of users, even from the start of this year, are now trading and investing outside of the US. So a very significant shift that we're seeing, and where we're seeing those flows go is actually more in the emerging markets. So if we look at even emerging market ETFs, they're up four times since the beginning of the year in terms of investment appetite there, and within that we see pockets of opportunities in terms of if I call out, for instance, India, China, etc., where we're seeing that people now want to diversify, not just have very concentrated plays in US specific AI, but areas of the market where there is a little bit more, should I say, differentiation in terms of performance and drivers.
I know you like the bond space at the moment as well. We've seen yields slipping a little bit today, but for how long? We've got the US deficit now, $1.8 trillion for this fiscal year, and we've still got 2 months to go. Just the interest bill at the moment is about $1.2 trillion. So where do you see yields heading? And we do, of course, have a very interesting 30-year auction coming up.
Yeah. No. So thanks, Paul, for that. And I completely agree. Right. So essentially, for us, we actually have a bit of a contrarian view here, where we see that the risk more to the downside on interest rate, on U.S. interest rates in general, versus the upside. So even after last night's print, which was within expectations and showing that inflation was coming down, that still there is a more than 70% pricing in the futures of interest rate hike and interest rate hike before the end of the year. Our view is actually that interest rates will remain on hold for longer, and potentially the next move could be down. So that's why we're very bullish on bonds right now. We see an opportunity, actually, particularly in that 5 to 7 year duration, where essentially there's a right risk from reward right now, because if you look at where bonds are pricing in, we've seen a 50 basis point jump in 10-year yields from the start of the year. So they are already pricing in potential interest rate hikes going forward, whereas we see that actually more risk is potentially to the downside again, and that is where you could lock in higher yields right now and really benefit not only from those yields but potential capital appreciation going forward.
All right, Samantha, thanks so much for your time today. That's Samantha Horton, COO at Syfe. Coming up, the looming departure of Tata's chairman is bringing a long simmering power struggle out into the open. We'll have more on the boardroom drama now threatening to overshadow the group's high-tech ambitions. This is Bloomberg. Welcome back. You're watching Insight. Tata Group shares will be in the spotlight when trading in India begins later on this hour. Group companies wiped out $4.5 billion in market value on Wednesday. Now, this is after Chairman N. Chandrasekaran announced that he won't be seeking reappointment upon completion of his term. Now, this deepens a leadership crisis at the Indian giant. Our senior reporter for conglomerates, PR Sanjay, joins us now from Mumbai. So, Sanjay, this has been brewing for some time. Can you give us a bit of background here, and how did we get here?
Certainly. So this division, this split, this differences of opinion has been simmering for at least 1-2 years. But very interestingly, the key to trust have said Chandra would be the next person, and they were willing to give the extension, and they have given their recommendations to the Tata Sons board also. But there was key differences in one of the key board meeting. Noel Tata had raised certain concerns about new age businesses and long gestation period for the projects, etc. See, he was very concerned about the profitability of companies like Air India, Tata Digital, Tata Electronics, and the foray into semiconductor, etc. But Chandrasekaran was in the opinion of that, these projects will have a long gestation period, but it will yield some benefits, and those are also national building projects per se. So, but there was some differences, and later that board meeting, he could not get full vote, and he said if there's an extension, that extension has to be unanimous, and that extension process or that vote did not happen at that board meeting. And later in the next board meeting, he asked all the CEOs to make presentation before Tata Sons, so that what are the roadmap and what are the capital allocations, capital expenditure for those companies, and he tried to convince, but still the different opinions were existing within the board and within Tata Trust also. And you could see that a lot of persons favoring Chandra had moved away from Tata Trust and Tata Sons as well. And you could also see the entrance of new people coming to those boards. And finally, there was an AGM which is scheduled to happen on 18th August, which is not going to happen because of there's no quorum. So there was this unusual quorum crisis which Tata Sons faced. And if that happens, there's no reappointment or rotation per se for Ramachandran. So he was seeking a graceful exit, and he said that he is stepping down, and he will continue till his term is over, which is February 2027. So the analyst community, the consultants, the viewers, the market is seeing that a kind of a graceful exit, but it will deepen the leadership crisis at the Tata Group, which is one of the India's oldest conglomerates, which is embarking upon a key critical issues, including smart mobile phone manufacturing, semiconductor, and turning around the unprofitable airline Air India. Paul.
All right, PR Sanjay Bloomberg, senior reporter for conglomerates there. Thanks for the background on this. Let's get a bit more on this story with Kavil Ramachandran, an expert on Indian entrepreneurship and family businesses at the Indian School of Business. Ram, thank you so much for joining us today. Now, we did have Sanjay lay out the background for us there. What does this look like to you? Why the demand from Chair Chandra that there be unanimity around him for the chairmanship, and why just step down because he's not getting it?
Yeah, it's to me, it's a very, very shocking kind of situation, which should not have happened. This is primarily because Tata has always been considered as an institution. It has evolved since Jamshedji had set it up long ago. All the leaders, all the successors have built it up together. And there are some of the key values driven followed by the Tatas. One is continuity. Fundamentally, it's a stewardship, nation building, predictability. All these values have been there. And this announcement has precipitated that. It has become so bad that the Tatas has lost that kind of a confidence. And that's reflected in terms of the stock market performance also. So it's a major, major challenge for Tatas also because there are 2-3 key things related to this. One is that everyone thought that this would blow away. This would not get into this kind of a situation where Chandra would put in his papers. And this is really shocking.
What is this going to mean for succession then at Tata in terms of who is the chair, and particularly now that this AGM, supposed to be happening in 5 days, won't be going ahead?
It's going to be tough. To me, there are multiple reasons, factors involved. One is the regaining the confidence of the multiple stakeholders. It's not the shareholders, because Tata has always been a service-oriented society, controlled, trust-based organization. And also there are multiple stakeholders. It is a highly diversified conglomerate, and everyone has faith in this, belief in this. Many people work for this or associate with Tatas because of the trusteeship principle it has always followed. And regaining that kind of a confidence is not going to be easy, because Tata has never been considered as a sort of a typical family business with feuds inside and the owner-driven kind of purpose. No, this has been professionally managed throughout. So regaining that kind of a confidence is not going to be so easy. That's one. Second is that succession is not an event. Succession is a process. And succession, especially for an organization which is driven by 2 key dimensions. One is the business performance, economic performance, financial performance. That's one part. The second is the values. And always, right through Jamshedji, JRD, or Ratan Tata's time, or even when they look for Chandrasekhar, in between Cyrus Mistry came, and there was also questions about his commitment to the Tata values that led to the conflict between Ratan Tata and Cyrus Mistry and his exit. So when we know all these things, finding a successor is not easy. Cyrus' time, it took long. Chandrasekhar's time, it took long. And it's not going to be easy. That's one. Second is that even if we find somebody, will there be somebody who is interested in stepping into this role, especially this time? And there are 2 different factors. One is that the external environment is turbulent. And whether you take geopolitical, technology, or market conditions, and everything is boiling. And it's a stormy water. You don't change the captain of the ship when the ship is in the rough waters. And that is very important. And finding somebody who is capable, who is interested in stepping in, will be very difficult. And the third point, very briefly, is that regaining the purpose. That's also going to be very difficult.
Ram, what are the implications for India as a whole as well? Because Tata is so huge, involved in so many infrastructure projects. Could there be delays, disruptions, and could this take on a political dimension?
It can. And if you look at the history, for instance, during the Reliance succession issue, when Dhirubhai Ambani passed away and there were issues between Mukesh Ambani and Anil Ambani, the government of India stepped in indirectly. And they said that you can't continue with this feud. You have to stop. It's not your private company. It's a nation's company. The same kind of issues are there. And therefore, I expect the government of India to play, if not a direct role, an indirect role. And I expect the board to show its wisdom further and also prevail upon Noel Tata, because there is a need for collective wisdom applied at the board level, at the organization level. If the board is not united, it will get send wrong signals to the constituents.
Yeah, well, to that point, I mean, the board is mostly united. It's just one holdout, Noel Tata. Is there some risks for him going forward and, effectively holding this process to ransom?
I think that he is not playing the trusteeship responsibility vested on him. He should have said that we are collectively, I may have a view, but if the collective wisdom of the board is different, I go with that. He should have sat down and instead of pushing with his own agenda that this is not correct, it's not an honor-driven company. It is a collective wisdom of the board, and the board members are all very, very wise people. And that is where somebody has to prevail upon Noel Tata and say that you can't play with this, you can't bring your ego into this picture. And it may be the government of India, it may be the industry community, it may be the investment community, it may be the wise people within the country who may have to prevail upon him. I mean, finding a successor immediately is not easy. I mean, keeping the ship under control is the first thing. And that will happen only if some facilitation is done to control the ego and get Noel Tata on the side of a collective decision making. Otherwise, it is not going to be easy. And we can't afford this to continue for long.
Kavil, just very briefly, 30 seconds. How do you see this playing out? When do we get a new chair?
I don't think that they are going to get a new chair easily. They may have to ask somebody from the board to step in, but I would hope and wish that the decision of Chandrasekharan is reversed. He is prevailed upon in the nation's interest. And everyone should, even if it happens something like family, I mean, everyone will come together to say that in the interest of the family, we have to work together.
Ram,
I think that will happen.
We're
I
out
hope
of time.
so.
All right, thank you so much for joining us. That is Kavil Ramachandran, member of the Supervisory Council, Thomas Schmidheiny Centre for Family Enterprise at the Indian School of Business. Coming up, ASUS riding a wave of demand for AI servers and premium PCs after posting record results. We'll speak exclusively to the co-CEO in a moment. This is Bloomberg. Back. You're watching Insights. Let's take a quick look at where markets stand. Mainland Chinese markets heading to lunch. Japan coming back online. And we do have the Nikkei better by 1.6%. The yen edging ever highwards, knocking on the door of 160 at the moment. But once again, it's the Kospi that's stealing a lot of the headlines there, better by 4%. The Kospi's gain from its July 30 low, now 20%, knocking on the door of a bull market again. So that's in just 13 days' time. Mirai Assets Securities says SK Hynix's correction now looks overdone, and we've got SK Hynix up by more than 7.5% as well. Samsung Electronics gaining also. If we take a look at the CSI 300, that's better by 0.5%. One stock that's a bit softer though, Tencent in Hong Kong, down by 3.6% after its results. Now we're also keeping an eye on ASUS shares after record quarterly results, helped by strong demand for AI servers, premium PCs and gaming products. Second quarter revenue rose 39% from a year earlier, while operating profit more than tripled. ASUS also doubled AI server sales and raised its 2026 server growth target, signalling confidence in continued AI infrastructure spending. And we can see there the market responding very warmly to all of this news. ASUS Tech Computer up by almost 10% in Taiwan at the moment. And we're joined now exclusively by S.Y. Su, Co-CEO at ASUS. S.Y., thank you so much for your time today. So a big jump in profit there. Can you sustain these sorts of gains in the coming quarters?
Hello, Paul. Thank you for having me here today. Actually, I think recently we got very good performance in the AI server business. Actually, in the Q2, our growth rate is around 200%, and the QOQ is about 58%. And original, our target for the whole year for the AI server business, our target is to grow around 50 to 100%. But right now, I have high confidence we can achieve about 150%. And the reason is from all the information I have, our AI server order visibility is quite good until end of this year or even the first half next year. Because I think right now, the AI server demand is so strong is because I think most people, they will agree that generative AI technology will help them to improve their productivity. And foresee in the future, they still have two very big applications like the agentic AI or the physical AI. Because traditional, most people use the chat interface to use the large language model. But if you are using the agentic AI, the token requirement will go up to 5 or 30 times. So I think recently the agentic AI is a really hot topic. So I think the token demand will become so strong in the future. And also, we will foresee the large language model will expand the usage from the cyberspace to the physical world. So the physical AI device will become so strong in the future. So every physical AI device, I think they also need a lot of AI computing power. So foresee, I think the AI infrastructure demand will keep very strong. Actually, I'm quite optimistic about this.
Well, you certainly have no problems on the demand side, but are you having trouble keeping up with that demand? Can you talk to us about what your supply chain is like and how your pipeline's looking?
Yes, actually, I think right now there are some issue about the component shortage. I think maybe this is the potential issue for our business growth, especially the memory. I think right now everybody knows the memory is in very serious shortage. Of course, the major reason is because the AI server demand is so strong. So most of the memory supplier, they are moving their capacity to focus on the HBM. So both the PC DRAM and the server DRAM is become in very serious shortage. But actually, I think ASUS also take a lot of action to respond on this issue. So we already sourcing as much as possible we can to get the device from different vendor and even from the module supplier. So all those memory we get, we will pass ASUS internal qualification test. We like to provide the high quality product to our customer. And besides, we try to get more memory. We also do a lot of different things. For example, start from last year, second half, we already to do the strategic procurement to enlarge our inventory. And also we discussed with our memory supplier. We signed the MOU or even the multi-year MOU with them. So to make sure ASUS can get enough supply. And also we have our internal R&D team. We also discuss with our customer. So we can adjust some product configuration. So all those efforts, we try to minimize those impact to our business.
So considering the efforts you're making to address those shortages, how long do you see the shortages lasting?
Actually, I think it will last until end of the 28, because right now, a lot of memory suppliers, they already start to enlarge their capacity, but they need to have the construction for their factory, and also they need to get the equipment, and then they move in those equipment, and they can start to do the pilot run. So consider for those timeline. So I think the more reasonable is the in end of the 28, they can enlarge their capacity and output. But I think still depend on the.
Yeah, well, in this environment of shortages, I understand that you are using China's CXMT memory chips as well. Can you give us a sense of the proportion of the shipments? And is there any risk there, considering the US concerns around security and other restrictions?
Actually, normally we don't discuss or naming any single individual commercial partners. But as a responsible supplier, ASUS will try our best to get as much as supply we can get from different vendors, include the China, Korean, US, and also we try to get some parts from the module supplier. So we will do our best to minimize the impact. And also considering about some regulation, actually we will meet the customer's requirement or the country's regulation. So also depend on the customer, we will provide the product fits their require.
Now, just before we let you go, away from the AI story, the commercial PC sales were also up for 6 straight quarters, I understand. How's the overall PC market outlook for the coming quarters?
Actually, our commercial PC growth is also quite good. And for the past 6 quarters, we continue to grow over 50% of the YY. So actually, this performance is really good. And even the total PC market TAM is dropped, but I think ASUS performance is quite good. In the Q2, our shipment is keep 20% YY growth. And ASUS is the top 5 Windows PC company. Only one still keep positive growth. I think this is the very good performance. But I think for the total market TAM for the PC, foresee that this year will drop about around 10%. But for the first half, because a lot of customers, they are pulling because they know the memory price were getting higher. So in the first quarter, actually, the total quantity shipment compared to last year is almost the same. So all the drop were coming in the Q2 and Q3. So for the Q2 and the Q3 point of view, the drop will be around 20%.
All right. Thank you so much for your time today. That is S.Y. Su, Co-CEO at ASUS, and ASUS shares right now limit up 10% in Taiwan. Well, let's take a look at Indian markets just ahead of the open. We did, of course, have the news earlier, well, yesterday, in fact, that the Tata chair is stepping down. He's resigning, Natarajan Chandrasekaran. So we'll be keeping an eye on that, on the group's performance today. But the Sensex are currently pushing a little bit higher at the moment. There you have the Tata complex at the moment, all unchanged, apart from Tata Motors showing some modest gains there. We also had CPI numbers out from India yesterday as well, rising 4.45%. So still inside the target band, meaning the RBI is likely to remain on hold for some time. Still to come, Treasury Wine betting its future on premium products after what's been a bruising year. We'll speak exclusively with CEO Sam Fischer next about whether wine drink. Welcome back. You're watching Insights. Bloomberg has learned that Josh Kushner and Bob Iger are buying the Los Angeles Lakers basketball team for a record-breaking price, $12.5 billion. The pair had been looking to acquire an NBA expansion team in Las Vegas, but pivoted to make an offer to buy the Lakers from Mark Walter, whose investment empire is under federal investigation. Well, let's get more now with Bloomberg's Balazs Pens. And Balazs, I want to start with the question I always ask when I hear that somebody's buying a sports team for billions of dollars. Why?
Well, sports teams have been very lucrative businesses. The NBA is booming, and franchise values have been skyrocketing. We've seen record deal after record deal. The Lakers themselves were just sold to Mark Walter a year ago for a then record $10 billion. So this is on top of that, if you will, a tidy profit in just a year for Mark Walter on this team. And we have also seen a lot of private credit and private investors looking into buying stakes in sports franchises. The financialization of sports has been underway for a while. So big 4 U.S. franchises, big English Premiership clubs have been going for very, very large sums of money. This fits into that. Now, of course, this is a record, and part of the reason for that is that the Lakers as a brand has been one of the most valuable brands in all of sport. It's a marquee franchise of the NBA, one of the most successful franchises, a big market in Los Angeles. So there's every reason to think that this is going to be a very profitable investment.
Well, Mark Walters and TWG Group are selling. Why are they selling? It sounds like they've got a few debts to deal with.
That's right. TWG has been under scrutiny for a while now with some issues relating to some affiliated loans, some of the private credit links that these insurers have. And what we hear is that some of the proceeds from this sale, the $12.5 billion, will go toward addressing some of those concerns, lowering some of that exposure that these companies have right now. We also have separate reporting to show that TWG has been approaching potential investors, potential funding sources to raise more money. There are a lot of conversations underway, different ways to pull more money into these businesses to kind of address some of those concerns. Some of that has to do with disclosure. Some of that has to do with some of the leverage that these insurers have. But certainly it looks like there's a major effort underway to raise more funds for TWG.
All right, Bloomberg's at Balazs Pens there. Thank you. Now, in other news, Treasury Wine shares have gained in Sydney right now. We're up about 4.75%. This is even after it reported a 36% decline in full-year earnings, with investors seizing on signs of growth in the critical China market. Earlier this week, the company also announced a nearly $400 million post-tax write-down to tackle supply chain problems in its US market. Joining us exclusively now is Treasury Wine Estates CEO Sam Fischer. Sam, thank you so much for your time on what's a very busy day. And of course, you had some downgrades in your earnings today, but the market was expecting all of this. Can you talk to us about why we saw such a decline this year? And do you feel like things are finally stabilizing?
Yeah, hi, Paul. Very nice to be with you. Yeah, we've had lots going on in the market. We've clearly worked hard on trying to build momentum in our brands. That's the first thing that I'm really pleased about in relation to this announcement. When we look at the US and we've seen depletion momentum build behind, our key brands there, that's been pleasing. And I've talked a lot about Penfolds and the role Penfolds is playing for us in the portfolio. And again, lots and lots of good news in relation to depletion momentum there. Some of the things that have impacted the changes are some structural challenges we've had in the business, particularly in relation to our supply chain in the US. And I've talked about right-sizing supply to our demand signal. And that structural imbalance has caused some of the write-downs that we reported on Monday and today. We've also had some inventory challenges in China. We've had some parallel challenges in China. And I guess we've taken really strong action to sort of bring all of those back into what we would see equilibrium and to take actions to right-size those parallel imports so that our route to market in China plays a key role in brand building. So all of those things have contributed to some of the numbers that we've shared today, but actually the underlying performance of the business is really strong.
Yeah, can you tell us a little bit more about those parallel imports, that grey market for your products going into China? You know, you have been cracking down on it, as you say. Is it mission complete yet, or is there more work to be done here?
Now, this is an industry in itself. Lots and lots of categories are impacted by it. I would say that we've taken strong action and we've been really pleased by the response that we've had in the market. I think we have to be vigilant in trying to understand whether or not any more open up. And if they do, again, we will take that definitive action. But so far, really pleasing response. We've seen price stabilisation, and in some instances, our pricing has actually got back to target levels. And I did announce today that we'd seen a few other areas of concern. And again, we've taken strong action there, to support our route to market in China and our ambition for the Penfolds brand in that critical market.
Yeah, another issue has been oversupply in the US, which you touched on briefly. But, I mean, this is linked to a broader problem. Well, some people might not call it a problem, but alcohol consumption is falling globally. Do you have a sense of being besieged by this problem at all? I mean, how do you navigate a difficulty like that where appetite for your product is starting to diminish?
I think that lots of reasons why the category's has experienced some challenge. Some of those are economic and to do with the consumer. Some of those structural. I still have huge optimism for the potential of the category, and in particular the brands that we have in the category. We see lots of positive trends around premiumization, and we're well positioned for those trends. Again, moderation in some instances, and our innovation agenda has supported moderation options. So, I'm optimistic. I think we do have to take actions where we see an imbalance, and clearly that's what we've done in the US, and that's impacted our short-term performance. But again, I've talked about the momentum that we've got in our core brands, led by Frank Family, Dow, Stag's Leap, Penfolds, and I'm incredibly optimistic about the brand building and execution work that we've done and the momentum that we're building. We need to take corrective action. We're doing it. But actually, long term, I feel really optimistic.
Yeah, is that where the action is in this market now, towards the high end? And what are you going to do at the lower end of the market as well, where the price point is lower?
I think we've talked about luxury red wine. That's been a stronghold for us with the brands. I'm now really excited about the potential of luxury white wine, and led by Penfolds and Frank Family, and some of the brands that we have in our portfolio. So, lots of opportunity for premiumization for those people looking to savour the quality offers that we have. I also feel good about some of the lighter styles that we've developed, and Mature in the US is one of them. It's a lower alcohol content. It's growing high double digits, and again, that's us playing into a consumer trend that we think's got lots and lots of opportunity. When we look at lighter styles and refreshment, again, lots that we have in the portfolio that play into different parts of the category that show significant potential. On the commercial side of the wine, we have had some more challenges, and we're managing those, and we understand the role that they play in our portfolio from a supply perspective and from a customer perspective. But we certainly see in some of the areas that I mentioned previously, lots more opportunity, and we're really well positioned to capitalise on them.
We've seen zero alcohol beer offerings performing quite well. Is zero alcohol wine a segment that you could see potentially growing into the future?
Yeah, we have actually, up in our Barossa Valley facility, developed quite unique technology for the production of zero alcohol wines. We've got quite a few parts of the portfolio that have a zero alcohol offering, and we see significant potential in all of them. So, yeah, as moderation trends continue, we will continue to develop offering in the portfolio from zero alcohol to lighter styles that we think have got huge potential. And you can expect to see more of that as we go forward.
There is another difficulty perhaps on the horizon as well, one that we'll all feel. There is a super El Nino event brewing, which is never particularly good for grape yields. How are you planning to mitigate against this?
Oh, we've got quite developed water management procedures across all of our vineyards, Paul. I think it's one of the real areas of strength within Treasury and our supply chain. We've been looking at weather patterns, and our sustainability agenda, I would say, is world class. So we understand some of these weather patterns. We're planning for them. We understand how to manage all of our inputs to get maximum yields without sacrificing quality. So, I feel confident in everything our supply chain does to manage all of the different weather patterns globally.
Now, I know you mentioned earlier you're expecting inventory rebalancing to continue, perhaps be done by the end of 2027. After these steps are taken, what else do you have in your strategy to turn things around for Treasury Wine?
Oh, I think, all the work that I've talked about in relation to execution, that brand focus, the increase in investment that we're putting behind our brands, the capitalizing on all of the trends we see in the market, and we've talked into many of them, whether it's premiumization or lighter styles or moderation. All of those areas are opportunities for us, and we're aligning all of the plans we have in the business behind them so that as we execute them, we tap into parts of the markets that have the most opportunities. So, yeah, I think there's significant opportunity for us. We're well placed to capitalize on them, and I think they underpin the growth ambition that we have for the business.
All right, Treasury Wine Estates CEO Sam Fischer, thank you so much for your time today as earnings has been announced and Treasury Wine's up about 4% here in Australia at the moment. And let's take a quick look at how markets are tracking right now. Australia's home to one of the markets that's losing ground at the moment. We're off by about 0.5%. But elsewhere, very much a risk-on day. MSCI Asia Pacific better by 1%. The Hang Seng Index kind of flat. We've got Tencent weighing on things a little bit as well after its earnings announcement. The Nikkei, though, higher, and the Kospi, once again, better by 4.3%, now edging towards a bull market. All right, before we go, let's take a quick look at tomorrow's show. Santanu Sengupta of Goldman Sachs is going to join us for our weekly India Focus segment. We'll be talking about his report on the impact of generative AI on jobs and productivity in India. And later on today, stay tuned for the latest episode of Bloomberg's Emerging podcast series. Menika Doshi explores one of the biggest challenges facing developing economies, finding enough power to fuel growth. That's coming up on YouTube, Apple Podcasts and Spotify.